Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Now, starting from the monthly time frame, what we can see is that clearly we have a market which at the moment is in a bullish trend from a monthly standpoint. In fact, we have seen the creation of several higher highs and higher lows from a monthly standpoint, and at the moment there is the possibility for the market to create a new potential monthly higher high because we just had the creation of a new higher low higher than the previous lows. So everything at the moment seems quite bullish. And if we look closer at what we have from a pattern perspective, we can easily identify this monthly impulse correction and at the moment impulse pattern to the upside. And in general, if you have an impulse leg and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see that the level that the market is currently rejecting is exactly the zone in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse candle. So a quite strong support zone that the market is currently rejecting to the upside. So from here, more bullish price action could definitely be a possibility. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can notice how the market had created this W formation. And in general, after the creation of a W, what you would expect is first a correction for the completion of the pattern and then to see more bullish continuation. And what we can see is that we did have the correction and now the market has been pushing to the upside once again. So from here, there is the possibility to see more continuation to the upside and for the market to create a new potential weekly higher high. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about USDJPY a couple of times in the past. In the past few days, I spoke about it when the market was around this area and I explained all the reasons for which we could expect this move lower. Then again, when the market was here, I explained all the reasons for which we could expect this rejection to the upside away from this level. And again, that is exactly what the market is currently giving us. And by the way, I will link in the description those two previous analyses so you can go and check them out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, the first thing that we have to keep in mind is that if we're checking the data for the JPY, we're actually checking JPY USD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have once again started decreasing on JPY USD, meaning that institutions have been moving back to the bearish side for the JPY, meaning to the bullish side of USD JPY, because if institutions are shorting the JPY, they're essentially longing USD JPY. And in fact, we can see that with the last report alone, we had 2,100 shorts added on the JPY and 7,600 longs getting closed, therefore making the JPY weaker from an institutional perspective. So it's clear that institutions at the moment are longing USD JPY, making it stronger. And by the way, if you're enjoying the analysis, make sure that so that you never miss new updates, you also join my free Telegram channel in which I keep you updated with any new analysis, content, or any kind of updates. You find it both on the screen and also linked in description. Now, continuing with an analysis and keeping in mind that USDJPY at the moment is getting stronger, let's go and see what we have from a technical perspective here on the daily time frame. Well, a very important level that we have to pay attention to is this previous high. At the moment, the market is rejecting this previous high to the downside and has rejected it multiple times. And until the market will remain below this level, it can easily be rejected to the downside. However, what we know is that in the market, previous resistance, once it gets broken to the upside, becomes support. So if the market will successfully manage to break above this level, this previous daily resistance would become support here. So if we get the break on the retest of this previous resistance turn support, where we could be looking for the next potential move? Well, if we get a break of resistance, the market goes for the retest, institutions are already longing USDJPY inside of a level of previous resistance turn support, there is very good probability of getting more institutional longing, and that would further increase the probabilities of a potential rejection to the upside away from this level. So if the market performs this break and goes for the retest, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential move higher for the market to complete this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.